But let's get right to this record-setting rally. Joining me now is Fundstrat Global Advisors Head of Research and a CNBC contributor, Tom Lee. Tom, it's great to have you on. 1,500 points for the Dow today. We haven't seen a move like that in a couple of years. Where do we go from here?
Wow. Well, I think, Morgan, today is really an example to show you that the market did not price in an election outcome. If it did, we'd be trading flat. I think it's real evidence that many investors, and this is something we could tell talking to our clients, de-risked ahead of an election because they thought there'd be a lot of social unrest, et cetera. And so I think money's being put to work, but in a way that reflects there's quite a lot of animal spirits in the sectors people are choosing.
The small cap, I should note, we have Qualcomm earnings out. We're going through those results. We'll bring him to you in just a moment. Mike Santoli is also with us now. So Mike, I'm going to go to you on this one, and that is the fact that we have seen this Trump trade in play today, whether it's the strengthening of the dollar against other currencies, it's the rip we've seen broadly in equities, especially those from steelmakers to banks to anything that's considered more cyclical and economically prone to stronger growth and deregulation. Bitcoin higher as well. But we've also seen some sell-offs within this market under the hood, too. Yeah. There had been a lot of speculation on whether the so-called Trump trade, as it was being defined coming into today, was going to actually pan out and play out. Your thoughts?
Well, it certainly is playing out, and it makes sense that it is, at least as an initial push. And I think on most of those fronts, it's been mostly just an additional kind of push behind some of the trends that have been stirring under the surface. Again, we've had cyclical leadership for a little while right now. The dollar has been relatively firm. Yields have been going up since the Fed cut rates, and economic surprises have been positive. Now it's just about kind of applying a little bit of that 2016 playbook and maybe sharpening it a bit when it comes to things like small caps moving, obviously banks just piling on the gains. I do think there's going to be a question as to the starting point. The starting point right now is not quite the same as it was in 2016 in terms of valuation, in terms of inflation, in terms of deficits, in terms of recent growth rates in the economy, and also arguably even in terms of investor posture. The market had been flat for 18 months before the 2016 election, and we're up 40% in the last 18 months here. I don't think animal spirits have been asleep. They've just been essentially energized that much more with this potential policy mix.